All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen. Look, I'm doing a little bit of a different run here, basically because of the webinar this morning, the Markets Talk, which I normally do every Monday, Wednesday, Friday. It had a little bit of a bug, and basically there was a lagging moment everywhere. So I thought, you know what, I'm gonna do these little separate videos in these segments. I'm gonna do one about indices, commodities, forex, and cryptos. I think that would be a little bit of a better option, because again, unfortunately, it's not going to be sitting in the live, category. It's going to be sitting in the videos, but it's the Markets Talk. So, but again, like I said, I wanted to do this very quickly just because there were a few issues on the live event this morning. So there was like a laggy moment. The audio was coming through okay, but hey, you know what? Anyway, ladies and gentlemen, let's without further ado, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes. Like I said, trying to fix the issues that happened, so I think that this will work out nicely. Look, very quickly also on our website, check it out. I think you can find more information about us. If you have any questions, you can always reach out to us. Ladies and gentlemen, very quickly, the first segment that I'm going to cover, that's going to be indices. Now, looking at the Nikkei 225 here, look, yesterday we had a good run. We created a new all-time high, but then we quickly drifted back down. Normally, I would say, to me, looks like a bearish indication because again, we go for a new all-time high, we cleared the previous one, but then we failed to stay above the previous all-time high. So in this case, this one, or actually in this case, it's this one right here. But hey, we go for an all-time high, we clear it, create a new one, but we failed to close kind of above it. So this to me kind of indicates that there is a little bit of weakness. This is what I would say normally, but because I'm looking at this formation here, and it seems like we're in an ascending triangle pattern. So what could happen in a way? If we continue to struggle, for example, to overcome this 44,000 kind of 935 zone marked by the highest point of August, then there is a chance for a bit of a drift lower here. And by lower, I mean only up until this upside line taken from the lowest point of August. Because again, like I said, it's an interesting pattern here forming. Looks like an ascending triangle, which according to all the TA rules tends to break to the upside. But hey, we got the breakout, that's fine, but we didn't really get the body of the daily candle remaining comfortably above that hurdle. So what I'm going to do here, of course, is I'm going to keep an eye on this. If we somehow manage to climb back above it and stay above this hurdle, this area, then yes, certainly I'm leaning towards that 44,000 zone, which won't be a problem. Probably we'll start shifting our attention towards the 45,000 mark on the cash index here. But at this point in the short run, if we continue to struggle to overcome this barrier here, I'm leaning a little bit more towards the downside. Look, there's a lot of things happening in general in the world right now. Geopolitics is going crazy. The world is, like I said, ready to kind of fall apart and blow itself up. But also we're watching the economic data, which I'll get to in a bit. But first, let me, like I said, Nikkei is subject to what's happening in Japan. In terms of Japanese data, we don't really have much happening today, tomorrow. We do have the bond auctions, industrial productions coming out on Friday, but okay, but I think that everybody's going to be worried about the interest rate decision, which is happening the next week. There's no action, there's no cuts or hikes, no, but certainly something to keep in mind, because again, it's really going to be interesting what kind of guidance we'll get from the BOJ in terms of further interest rate cuts. And for now, we know that at the end of October, we are planning to see a hike, so a 25 basis point hike. So maybe this is going to be, like I said, maybe this is going to lead to some lower moves here on Nikkei 225. But again, before that, we still have time. Before that, there could still be some positivity, but again, also depending on the global situation. So China, let's have a look at China. China looks somewhat positive. I mean, I talked about this previously. We're currently in the box here, and we're really kind of struggling to clear one of the sides here. Look, that's fine. It can stay here. We can get our false breakouts. That's absolutely fine. But let's not rush into conclusion where it could break out to. Normally, I would say to the upside because the prevailing trend is to the upside. But a confirmation break is still needed. So until we get that, we cannot really get way too comfortable with any of the kind of directions here, in the short run. So let's wait for that clearance, and not only clearance, but also the body of the daily candle remaining outside of either the upside of the box or the downside of the box, and then we can, like I said, take it from there. China data we saw came out this morning. We got the inflation number, which I talked already in the morning webinar, but it didn't really, like I said, you can still watch it. The audio comes through okay, but it's just that the visuals are a little bit, on the lagging side. However, let's try to fix the situation. So basically, with the inflation, look, China's situation is this: that at the moment, inflation numbers are in negative territory. That's kind of it's not the best thing that that China could have right now, because again, it's a little bit of inflation is needed, because again, this indicates growth, and certainly judging from that, China is struggling with growth right now. It's not collapsing, or no, but it's struggling with growth a little bit. We are seeing also issues in the housing market, a little bit oversupply, but let's see how they're going to come out of this. But again, in general, I think the fact that the whole U.S. tariff thing kind of calmed down a little bit, that's what's interesting, and that's what's kind of still is a positive. So yeah, looking at the index here, yes, we're waiting for that clearance, one of the sides. U.S. indices, of course, we're going to be watching those very carefully today, tomorrow. Why? Because we have the PPIs today, the U.S. PPIs, which are expected to come out the same as previous on the year-on-year side, but on the lower side here on the month-on-month area. On the month-on-month from the month-on-month perspective, that's the one. Yeah, look. The month-on-month number is interesting, to be honest, because it's way too low, in my opinion. I don't really. I said it in the morning as well that I'm not really. I don't know. It has to be really an interesting number here that is going to come. If it comes out on the lower side, I don't know. I mean, this. I don't know if this is going to be seen as a very positive thing. Maybe an impulse in the indices, we could see it to the upside. But then I think the market will stabilize and understand that, this is not something that we want to see, because we want to see a little bit of progress. Look, maybe they will say the year-on-year is still fine, but the month-on-month, there could be a slowdown. So I'm kind of hoping to see it somewhere in between, maybe not 0.9 and not 0.3, but somewhere in between here. So again, it's judging from what's happening right now in the inflation world, or should I say, on the inflation side, and what's happening with the Fed. The Fed, look, the Fed is worried about about inflation, because look, tomorrow we're getting the consumer, the CPIs here, and what can I say? The consumer price index is the one that, well, actually not this one. We're watching this one. 2.9. The expectation is the 2.9 on the CPI is expected to come out, and it's higher than the previous, of course. And this is the bad trajectory that the Fed doesn't want to see, because they're currently focused on cuts, because it seems like they want to please the market, the market. They want to please the White House, and it's like one of those, like, hey, there's a present for you, like, here you go. We'll throw in maybe another 25 basis point. Maybe we'll go for the 50 basis point cut. So yeah, we'll have to wait and see for next week, because next week we're getting the next week we're getting the announcement of the interest rate by the Fed. But also, what's interesting, we're actually seeing this here. So there is a probability for a 50 basis point cut. Interesting. So again, like I said, it's going to be a good moment. And also what I said previously, look, in terms of the technical picture, Dow Jones Industrial Average is looking very nice here towards the upside. We're hoping to see a new all-time high maybe. In a way, it kind of already cleared it and almost it reached it on the 5th of September. There we go. We hit a new all-time high. The S&P 500 as well. And what I said to you previously that Nasdaq is also at a point where it can actually hit the all-time high. So the 24,000 mark is becoming very attractive here on the cash index, and I think that if we're ready to reverse lower, then we need to wait for Nasdaq to hit the all-time high, and then we can see a drift back down. Because on the S&P here, we're looking at this. I mean, it looks like a rising veg pattern, which tends to break to the downside. So there could be some more downside to come here. So again, be very careful right now this week, especially with the inflation numbers from the U.S. Because if suddenly those are not very satisfying, let's say those are on the higher side, this puts the Fed in a pickle and kind of could reduce this number here, or in general, it could actually just put totally everything into the one cut, but that the market could see that somehow as a negative, to be honest, even though the cut is a positive, just because maybe this has diminished or disappeared totally, this probability for 50 basis point cut. Maybe that could, like I said, maybe that could drive the market lower. So keep that in mind, ladies and gentlemen. Another index, and that's the dollar index. So of course, if inflation comes out on the higher side, we're certainly watching this one, maybe potentially popping higher. But I don't want to rush into things. And I said this morning that I don't believe in a strong dollar for now, just because the U.S. needs to make their exports a little bit more attractive. So hey, let's keep that in mind. Maybe, like I said, maybe this could shoot up a little bit here, test the downside lane, the flatter one, and then kind of drift back down. But still, I'm watching this 97.42 as a good barrier to the downside. Let's see if we can break that. The German index DAX, selling off this morning. We did the same thing yesterday. We sold off, but then we kind of stabilized and pushed higher again on the futures. And the cash index pushed further. Am I getting very bullish? No, because I need a clearance of this 24,000 zone somewhere around here. Then I'll go towards this downside line, which is kind of taken from the highest point of July of the 2025. But if we clear this little short-term upside line taken from the low of the 2nd of September, and we clear the 100-day EMA, or actually, I would say we automatically would clear the upside, this 100-day EMA, and then we could see a drift to the downside. So keep that in mind, ladies and gentlemen. So that's the kind of little idea here on the German DAX. But of course, how can I forget? On Thursday, tomorrow, what's going to be interesting here? We're going to be getting the US CPIs. But before that, we're going to get the interest rate decision by the ECB. Now, that's going to be an interesting one. Look, the interest rate decision will be the same as previous. They're not going to do anything. But what's going to be interesting is the Christine Lagarde's press conference, and in terms of how they're going to proceed further. I mean, are they going to be worried about rising inflation, or which I wouldn't say it's rapidly rising, but it has potential, or actually they will they will say that we need to stimulate economic growth, and that's why we're going to drop the rate even lower, below 2%, which I don't know. I kind of somehow doubted, but anyway, maybe. But so that's what I'm saying. So for now, we're watching that, and keep an eye on the German DAX. Keep your ears on the ECB press conference, because that's going to be an interesting one, and that could be a good mover for the DAX. DAX will also move on the US CPIs because the US indices will move. But the press conference will be quite important as well. And finally, the UK, the FTSE 100. Look, I mean, we're flirting with this 9,252 territory. Look, I would say it this way: as long as we stay above it, I'm going to go higher. I'm going to aim for that 9,358, 59 zone here, which is the current all-time high. So basically, there is still room for some upside on this one. Let's see if we can if we can go towards that all-time high again. But my downside scenario is very conservative. I'll wait for a drop below the 50-day EMA, and then we'll go from there. And that's kind of it, ladies and gentlemen. So like I said, I wanted to do these like a little bit of a different, these are recorded, not live. So because again, the live session did not go as planned, but again, there was, like I said, the audio is there, but the visuals are a little bit lagging. So you can still listen into it, and that's fine. But certainly, yes, I hope you will find these little videos useful as well. Thank you very much, and I shall see you in the next video. Bye for now.